This might quite possibly be the best prop firm strategy of all time, because either way, whether you pass or you fail the prop firm challenge, with this strategy you have the potential to actually make money either if you pass or if you fail. And unfortunately, I wasn't smart enough to think of this simple strategy. I was actually speaking to a customer of ours who's absolutely brilliant, and he happened to be one of the most successful poker players of the world. And he was telling me stories of days when he would either make or lose $100,000 playing poker, believe it or not. And so he's understood probabilities and statistics unlike anybody that I've ever talked to. And I actually got the idea from this guy. So here's how you could potentially make money regardless if you pass or fail a prop firm challenge. So for the remainder of this video, I'm going to be talking about the E8 one-step pro challenge for the $100,000 account, which cost about $400. E8's a prop firm that I really like at this point. I've had a lot of success, gotten a lot of funded accounts and a lot of payouts, and so I really like it. This works for any other prop firm or even two-step challenges that you may be taking as well. But for simplicity's sake, I'm just going to explain it using the E8 one-step challenge. Okay, so before I show you how the strategy works, let's take a look at what most people actually do. So most people will go out there and they'll sign up for a prop firm challenge and they'll spend like around $400 to take an evaluation with the chances of hopefully getting access to a $100,000 account. Now, with that challenge, you have two options. Either you're going to pass or you're going to fail. Now, if you happen to pass the challenge, which I think only about 6% or so of the people actually pass a prop firm challenge, you then have the potential to actually make profits, which I heard is even smaller. Like the percentage of people that actually make profits that sign up from a prop firm challenge is really abysmal. It's like 2% or something like that. Or the other option, which is a lot more likely, is you could fail your prop firm challenge and essentially you would lose $400, which according to most prop firm statistics happens like 98% of the time. So this is not really a good model. Now, if you get really good at passing prop firm challenges, you may be able to get up around like a 30% pass rate, which is pretty good. And one of the most successful manual traders that I know that's taken sufficient a number of challenges that's actually been paid out millions of dollars by prop firms, he has about a 30% pass rate. Now, if you can get up to that point, then you can have a lot better edge at actually making money with prop firms, but most people aren't talented enough to get up to this pass rate. So with that being said, doesn't it make sense that we should try to cut our downside risk to as little as possible? Or what if there's a way that you could actually make money when you fail, which according to most statistics say that most people fail 98% of the time to actually get a payout? That'd be pretty good, right? So first things first, let's see how we could reduce this risk to where even if we fail the prop firm challenge, instead of losing $400, what if we could just be close to net zero, meaning that we're able to make back this $400. So I'll show you this and then I'll show you how you could actually make money when you fail potentially. So here's what we've been doing inside of our community that's been the biggest game changer. We've done something called hedging, and hedging is simply when you buy something else to protect yourself against something. So it's a smart thing to do. For example, you may buy an umbrella to protect yourself against the rain. It's just generally a smart thing to do. Now, in this scenario, when we talk about hedging, we're going to have this goal of recovering our $400 challenge fee. Okay, so that means that even if, God forbid, only 2% of the time we're able to actually make profits and get a payout, well, this other 98% of the time, ideally, we're not losing any money. This would be a dramatic advancement compared to what most people are doing currently. So the way that hedging works is instead of just trading our 100K challenge, which again, this could be with E8, it could be with FTMO or any other prop firm that you want to. Instead, now we're also going to trade our own personal account at the same time. And in this example, we're going to deposit $1,200 into a brokerage account, which we're going to use to hedge or protect our downside risk. So we could do that with a broker like PlexiTrade or Ox Securities, or you could use any other broker that you'd like. Now, the way that this works is if we're taking buy trades on our challenge account, then our hedge account, we want to take sell trades. And if in our prop firm account, we're taking sell trades, then in our personal account, we want to take buy trades. Now, also, since this is a significantly smaller account, we want to take smaller trades. So let's say, for example, we're taking buy trades with a 1 lot, okay? Then we may want to take sell trades with a smaller lot like 0.1. Or if we're taking sell trades of 1 lot, then we want to take buy trades of say 0.1. Now, what does this all mean? This means that if we're making money on our challenge account, then that's that's good because we're passing a prop firm challenge, but that also means that we're losing money in our hedged account with our real money in it. Now, also, if we're losing money on our challenge account, which happens more often than not for most people, then that means that we're actually going to be making money in our hedged account. Now, in order to make this happen, of course, you could do it manually, but there's other technology like copy traders or mirror traders that may be able to do this. Or also we've built an in-house platform called our hedge bot that basically does this all for you automatically. If you take a trade on your challenge account, it'll automatically take a trade on your personal hedged account with the appropriate lot size. So it does all that calculation for you. And again, I think there are solutions out there that you could do it for free, but our hedge bot is pretty advanced and has been working for, tons and tons of people already. And we continue to develop this every month to make it better and better. So if you're interested in giving that a try, you can go over to www.propfarming.com and see a demo on exactly how this all works. Okay, so now let's jump over to this calculator and let's break down the math of how this would actually work and play out in real time. And again, this math you may need to go over another time and rewind this video, but it's important that you do because this strategy can change everything for you when it comes to being a more profitable prop firm trader. So in this case, we're saying $100,000 account that costs us $400. In this case, we're saying the profit target is 8% and the max loss is also 8%. Okay. Now in this scenario, all we're going to do is we're going to deposit $600 into our real hedged account. Now let's break this down. So with the first phase of the challenge, there's two scenarios. You can either pass or you can fail. Okay. If you pass, you then get a funded account. With that funded account, you can either pass and make your profit target of 3%, say an example, or you fail to make a profit. Okay. So let's break this down. So phase one, we paid $400 and let's say that we fail. If we fail to pass this phase, that means that we've lost $400 on our challenge fee, but in our real account, we'll have made back the $400. Okay. So our real account balance went from $600 up to $1,000. Okay. In this scenario, and we simply withdraw that $400 profit. It cost us $0 to give this a try. And we just simply rinse and repeat that process until we're able to pass the challenge. Now, let's say, for example, that we are able to pass the challenge in phase one, which is scenario number two. That means that we won't make anything on our challenge fee, but we will move on to a funded account. In our real account, we'll have lost $400, meaning that our account drew down from $600 to $200. Okay, so essentially it cost us $400 for the challenge fee plus an additional $400 that we lost in our real account. So it basically cost us $800 to get funded $100,000, which is pretty good, right? Now we move on to the funded account. So now we have a $100,000 funded account. In this case, we're going to say, let's go for a 3% profit split. Let's say that we earn an 80% profit split with this prop firm, which is pretty standard. And then let's say in this case, we're going to need an additional $1,000 that we put into our hedged account. Okay. So the way that this works is once we get the funded account, we have two options. Either we're going to fail to hit our 3% goal, or we're actually going to pass and hit our 3% goal. So if we fail to hit our 3% goal, that means that number one, we'll lose the $400 challenge fee, which sucks, but our real account will have made back the $800, which is what it cost us to get funded. And the reason we've made back the $800 is because we've set our recovery amount to $800. Okay. So what happens here? Our real account balance goes up to $3,000 and we've basically washed, or we've made a net zero gain, and we can simply rinse and repeat this process. Okay. Now the other option is to go ahead and actually pass and make a $3,000 profit, which in case of making 80% profits, will make $2,400. If this happens with this particular prop firm, we will not get back our $400 challenge fee. With some prop firms you can, so you can toggle that on to yes. And by the way, I'll include this calculator down below in the description so you can play around with it for yourself. But in this scenario, again, we passed and we hit the profit target of $3,000. Our real account will have lost $300. Okay. But since we hit the $3,000 and we got a $2,400 payout, okay, what will happen is we'll gain a net of $1,300, which is awesome. Not as good as making $2,400, but we'll gain a net $1,300 and we'll get to keep the funded account, which is really, really cool because any other profits from that point on that account are pure profits. Now, how did I get this $1,300 net profit? Well, I basically said if on this profit split of $3,000, I made $2,400, well, it already cost me $800 here, plus it cost me another $300 here. That means that it cost me $1,100, and I got a $2,400 payout. $2,400 minus $1,100 gives me $1,300, and I get to keep this funded account. Okay, so here's what it actually looks like on MetaTrader. So you can see here I had my prop firm challenge over to the left, and then over to the right, I basically had my hedge bot running. Now you can see here, for example, I took a buy trade of 2.31 lots, and it happened to lose $1,400. Now over here, I took a sell trade of 1.3 lots, and I happened to make $75. So you can see here on my trades here that I was taking buys. Over here, I was actually taking sells. And then when I was actually taking sells, I was actually taking buys. So when I was losing money on the prop firm account, I was actually making money in my hedged account, which is brilliant. And in this case, you saw that I made $395 of the $417 that was the amount that I was actually trying to recover. And again, I know this is different than the $400 that I showed you. The challenge actually ended up costing me $417. And again, I didn't recover 100% of the recovery amount that I was looking to recover, but I got pretty close and I recovered about 95%, which is amazing because I've cut my downside risk by 95% in this case. So now remember that Japanese poker player that I was telling you about that was totally brilliant and understood probabilities and statistics unlike anybody that I've ever met before. He got so excited about our product and about this strategy in general simply because he was saying when he was playing poker, he was going up $100,000 or down $100,000 in a day. And if you can imagine 4 or 5 losing days in a row, that could get really psychologically taxing. So the cool part about hedging is that your drawdowns are going to be way shallower and your upside potential is a lot higher in this scenario, okay? Because we've cut down the vast majority of our downside risk by hedging or protecting ourselves. And he likened it to like buying free lottery tickets in the sense that likened getting a funded account kind of like getting a lottery ticket in a sense, because this account could make thousands of dollars worth of profit, and at the same time the downside risk was very, very low, right? If you could essentially buy lottery tickets for 95% cheaper or 100% cheaper than other people do, then you'd probably want to buy as many lottery tickets as humanly possible because your edge is way stronger than anybody else. That's hedging, which is a game changer. But now I want to show you how we can take this to the next level and how you could potentially make money when you fail prop firm challenges. In this scenario, this is called over hedging, okay? So instead of before on hedging where we were just trying to recover this $400 challenge fee, now in this scenario, we're going to not only try to recover the $400 challenge fee, but we're also going to try to recover $600 worth of profit, meaning that even if we happen to fail our prop firm challenge, that we're going to make back our challenge fee, plus we're going to make $600 profit, okay? So this is going to work essentially the exact same way, okay? Again, we have our challenge account over here, and we have our hedge account over here. And again, the same idea, if we're taking buy trades on our challenge account, we're taking sell trades and vice versa. Also, if we're making money with our prop firm account, then we're losing money on the personal account. And the same thing, if we're losing money on the challenge account, we're making money in our hedging account. So let me break down how this actually works. So in this case, instead of just trying to recover $400, we're now going to try to recover $1,000. And on the funded account, we're going to try to recover $1,600. So the way that this works is on phase 1, there's 2 outcomes. Either we can fail or we can pass, okay? If we fail the challenge, we've essentially lost the $400, but our real account will have made $1,000. So we simply have withdrawn $1,000. We've made a net profit of $600 and we get to try again, which is awesome, right? Imagine you're now doing prop farming, you're trading with prop firms, and even when you fail, which happens more often than passing, imagine you also make money. In this case, $600. This strategy also has some added risk that I'll talk about in a second, but it's pretty dang cool. Now with phase 1, that's what happens if you fail. If you pass, that means that essentially we'll have lost $1,000 in our real account. So that means that it costs us $1,000 plus the $400 challenge fee, or it cost us $1,400 to get a $100,000 account. Now, when we get the funded account, we're also going to go for a 3% profit target. Now, what this means is that we're going to need to deposit an additional $1,900 into our personal account, okay? And again, the hedge bot, it's going to take care of doing all of this stuff for you, but this is in case you're using like a mirror copy trader and you want to do this by yourself manually. These are the numbers, right? So for example, let's say on the funded account, we failed to make our 3% profit target. That means that we lost our $400 challenge fee, but again, our hedge bot should have recovered about $1,600. So that means that we gained a net of $200. Remember, it cost us $1,400 because we lost $1,000 in our real account plus the $400 challenge fee. So it cost us a total of $1,400. But in this case, we recovered $1,600. So we gained a net $200. So what does that mean? That means even if we passed phase one, lost money on our real account, and then got a funded account and failed to actually make a payout, we're still net profitable a little bit, which is pretty cool. Now, the other thing that can happen on the funded account is you could pass, meaning that you make your $3,000 profit target. We're still going to lose our challenge fee. Our real account will have lost $600 and we'll gain a net $400, which is pretty awesome. So how did I get we gained a net $400? Well, 80% of the $3,000 profit target is $2,400. Now we have to subtract our cost that went into it, which was $400 plus $600 plus $1,000. That's a total of $2,000 that we lost in this process, but we got a $2,400 payout and we gained net $400. And the best part is we get to keep this funded account, which is awesome because you don't have to hedge anymore. And that entire account was essentially risk-free and you had very minimal risk on it. And now you can get as many payouts as you want to. So this is really, really powerful, as you can see. And this is actually what I've started doing on my challenge accounts as well. It also works for phase two challenges as well. You'll just need a little bit more capital to actually be able to play this strategy out. But in the calculator, you can play with the numbers as well, and you can see how it works as well. It's just a little bit, requires a little bit more capital. Now, this strategy doesn't come without risk, and so I want to make sure that you're aware of the risks. The biggest risks here are that you are going to need more capital to hedge with, and the number one biggest risk is if you work with some shady prop firm that you go through this process and you get to the point where you're owed a payout and the prop firm doesn't pay you out for some reason. So I really only recommend using this strategy with really reputable prop firms like ones like E8 that's been great, or FTMO or Fibers, or some of these prop firms that have been around the block for a long time and have a really good reviews online. I wouldn't do this with just any new prop firm, even if they're a lot cheaper, which means you need less money to hedge. So the biggest risk is that you've lost money by hedging to protect your downside risk on your real account and the prop firm doesn't pay you out. Okay, so just be careful with this. This is something that I'm using now with prop firms that I have a good history with, that I've received multiple payouts on. So anyways, if you'd like to try this, if you'd like to trade with us and increase your pass rate to way beyond the 5 or 6% that is what normal people do, and you'd like to have the hedging and all of that sort of stuff done for you, then go on over to www.propfarming.com and you can check out a demo of how that all works. And we look forward to seeing you in the next video as well.